the week review. Next week we have Nvidia earnings and Walmart earnings as the big things. This week was a complete slaughter. Semis breaking down, healthcare breaking down, biotech getting absolutely destroyed, minus 10% day on 10% week on XBI. Staples getting destroyed some more, and all the industrial stuff gave all the Trump gains back. I'll show Newey up 20%, 15%, sorry, it's back at the same level. Stuff like Coke further down on the weekly. Semis got absolutely destroyed this week. TSM gave all the earnings gains back. We are now back below this horizontal level. Pretty bearish. MU after triple rejection here, and we had this horizontal range, and we broke down below this horizontal range. AMD looks like a trendline break, AMAT trendline break, clock trendline break, ON horizontal level break, and so on and so on. ASML tried to go back up, got rejected at the AVWAP. Like, things look very bearish across the board. And we said in the past that things look weak at various points, but this is on a whole new level. Like, I haven't seen this in a very long time. Things look like they will absolutely break down in a horrible way, and even with Nvidia earnings, like, they have to be extraordinary. The market needs to go up a lot, not a little. Not the market. Nvidia has to go up a lot, not a little, for this to be fixed. And let me show you some other stuff as well. There's a saying something like, there's nothing more bullish than a stock going into overbought and staying overbought. And example of it here, an example of it here, an example of it here. But what we see in the last couple of months is, even on the highs, it fails to go into overbought. Like, all, see this here, and making lower highs as well. This is true for Walmart as well. It's becoming a bit concerning. Walmart looks like shit in my opinion. I mean, it doesn't mean that it cannot go up on earnings, but I would expect that it gets faded all of day. Like, if it goes up on earnings next week, I would expect this becomes a red candle by closing, and we go back into this level. Like, if it goes up, let's say, to 90, I think we close to 85 by end of day uh, for this. And because Walmart is not a squeezable stock, it's not a options market darling. This is very likely to happen in my opinion. For Nvidia, it's more complicated because Nvidia it's the options market's darling, and it can squeeze. People will get in like crazy. But anything that is not extraordinary for Nvidia, meaning like 7-10% at a minimum in post market, I think will get faded as well, and we go lower. And again, this looks absolutely horrible across the board. Banking is the only sector still looking okay, but even that one, look at XLF. What what I just explained about getting into overbought, and we are at the end of a large divergence. I think there's a good chance that XLF and banking in general turns back the bearish next week as well, and everyone will jump in. And when everything is synced in a move down, that's when we can escalate really quickly. Another aspect is VIX. We have VIX expiration next week. The biggest level is 20, and is likely going to be a magnet for us at 24 VIX expiration, or it can be a magnet. Uh, but look at this. This is the OI, and you can see green is all the puts and calls expiring next week on Wednesday, and you can see there's a lot of them. These are market hedges, and a lot of market hedges are going away exactly at Nvidia earnings. Meaning, if Nvidia earnings reaction is negative, we would be having an unhedged market. This is a recipe for disasters. yeah, it's not looking pretty, boys and girls. All I can say about it. It again doesn't mean it has to realize, but I've never seen things aligning for the Bears this much in a very, very, very long time. So yeah, finally, let's talk about yields a bit. Uh, Obviously, I don't like that fact that we haven't bounced here, but I like a couple of things, meaning we haven't made new lows. Uh, Market going down will make yields go up because any type of weakness is perceived as yields have to go down. Uh, on top of this, when I said it hasn't made new lows, I mean in the context of we had hot uh, CPI, we had hot PPI, we had hot retail sales, and in spite of this, all the negative, theoretical negative catalysts for yields, we haven't made new lows, which is uh, bullish for the bottom is here thesis. Another thing that is relevant for yields is who will be the next Treasury Secretary. It hasn't been announced yet, most likely next week. If the market likes it, expect yields to tone down a bit and uh, TLT to go up. If the market doesn't like it, it will do a tantrum and we probably go to like 87.5, 87, something like that a bit later. That's going to be a big catalyst, but if the market is weak, it can be offset. One thing to note here for the long term is I have a prediction for next year in that the Fed will do QE at one point. The the US is on a path of an unsustainable fiscal policy, and there was a thread I retweeted. This one. Let's talk a bit about this. So even with Dodge coming in, Department of Government Efficiency, it is unlikely that the government will cut spending. This is healthcare, income security, blah 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 blah. The things they can cut are a very small piece of the pie. This is the whole pie. And what we've all been seeing the last couple of months is a huge increase in debt servicing as a percentage of GDP, currently at 12% as shown here. Now, they they will never cut spending. This part will always be increasing, basically, or flat at best, increasing at worst, increasing a lot at worst. But if this stays flat, let's say it stays flat, or actually let's say it increases, and it will likely increase, then the government needs to take on even more debt because this part of the pie will only get bigger and bigger as you get new debt and yields stay high. The only solution in which this can increase or stay at least flat and this do not increase, which is desirable, is lower yield. Given that the free market is very unhappy with the current setup, the only way yields go down against the free market is QE and yield curve control. So the only way this goes down but then spending goes up is if yields go, I don't know, 2%. This is another bullish case for TLT with yields going back to 2%. And we have an example of this with Japan. They did, no, not US, sorry, GP10Y. In 2016, they introduced yield curve control, initially at 0.1. They recently increased it to 0.2 and they left it unchecked at, I think, at 1 or something recently, at 1. Now, what this means, yield curve control means instead of letting the free market decide what yields are, the government decides that yields have to be at level X, and anything that goes above level X, they buy indiscriminately. They buy so much
that the market stops pushing the yields higher, because whatever they try to sell and push the yields higher, they get bought out by the government. And the government doesn't care about what's on the balance sheet, meaning the Fed. And you can see here, every time it tried to push above 0. 0.1, it got pushed down, tried to poke, and so on and so on. And when they moved it to 0.25, same thing, it got pushed down, it never went above it. They only went above when it was let by the Bank of Japan to go above. So the only solution to uh, debt as a percentage of debt servicing as a percentage of GDP to go lower is for yields to go lower. If they don't go lower naturally, they will be forced lower. This is my prediction for 2025, and we will get QE at some point. I think QT stops by end of Q1 in March, and then by probably September we get QE back on. Even if nothing breaks. If something breaks, this is a guarantee 100%. If nothing breaks, I think we still get QE back by September, because this will only increase with yields staying here, and the free market will not drop yields with the current fiscal path. No amount of efficiency in the government will fix this. So the government needs yields to be lower, and they will be made to go lower at some point if the market does not cooperate. If the market cooperates and drops yields naturally, that's very good. But if the market does not cooperate and still is in this scenario, it won't be a linear path. Like, it won't just stay here the entire year until September, and nothing really changes. We will go down, we will go higher, we will go down, we will go higher, and so on and so on. But in general, if the government needs yields to go lower and the market doesn't cooperate, then it will force it to cooperate, and we will have yield curve control in the US by end of 2025 if the market doesn't cooperate. This is my prediction for TLT, and why I still think it's a very good play, even if we go lower here. Yeah, that's it for this week. Have a good one. Bye bye.